Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. Happy Tuesday, and I hope you are doing well in these crazy market days. A little bit less crazy than perhaps the start of the year. We have seen volatility remain pretty low here for a suspended period of time. I did put on some fresh trades last evening that I will be talking about in today's video or in today's live stream. Wanted to talk a little bit about high level view of everything. As we get started, let me just ask you guys a favor. If you are new to the stream, consider subscribing. If you are here and enjoy the streams each day, help us out. It's a free thing to do. Hit the thumbs up button on the live stream. Just help us get the thing started here. Boom, there's a like button on the screen. Love that. So yes, if you could do us a big favor, hit the thumbs up button, help the stream out. Greatly appreciate it. Okay, so we got a lot of people in the chat, 156, 157 people already tuned in between Twitter and YouTube. Give everybody just a second to join up before we get into some things. Hey, Nick, did you see oil? Let's definitely take a look at oil. Good morning, Ryan. Good to see you. Roberto, good to see you, my friend. Moses, hi. NOE, what's up? Jacob, good to see you there. CFD's Trader. That's the intro. Indeed it is. Good morning. Good morning. Hello, hello, hello. Hope everybody is doing well. Okay, so perspective today is I do have a dollar short position officially on. Any guesses? Does anybody have a guess? If you're in the VIP signals room, don't give it away. I took a trade on a dollar cross in favor of dollar short positioning. What's up, Lincoln? Good to see you. Wow, got people from all over tuning in, watching from the Philippines. Very cool. Okay, so the trade that I took is euro dollar. I went long euro dollar, small position, initial long position established on this currency pair. I'm going to break it down a little bit as to why I took that trade. We do have some pretty strong readings on the Edge Finder's top setups page. What this is telling you when you see euro dollar getting bullish, Kiwi dollar bullish, dollar yen and dollar Swiss getting bearish readings. What does that tell you about what the Edge Finder is thinking or feeling? Actually, can I ask just a classroom question here? I know a lot of you guys tune into the streams and videos. Some of you have the Edge Finder. Some of you are just students. I hate to use that word, but people who watch the content. I don't consider myself a mentor. I don't consider you guys students. I'm just doing trading here. And if you're learning something, awesome. But I'm not your mentor. I am just a guy who trades and I share my thoughts on YouTube. And I have a question for you guys, which is, if the dollar is getting kind of a bearish tilt on the Edge Finder, you tell me, because I say it all the time, but this is a good quiz opportunity. Why is the Edge Finder bearish on the dollar? Based on what we see here, right? Give me the answer. I'm curious what you guys like. If you were to write it out, if you were to explain it back to me, that's the best way to learn, right? Best way to learn is when you're learning something in a kind of an educational setting, is for you to recite it back or present it back. That's why as a kid, you always do presentations on things that you learned about, right? Why is the Edge Finder tilting bearish on the dollar? Any guesses? Rate cuts, economic factors. Roberto gets it. Stagflation risk. Slowdown in labor data plus sticky inflation. Bingo. You guys get it. Andrea says stagflation, rate cuts incoming, economy uncertain, Dixie bearish. Yep. Economic growth data coming in weak for US and sticky inflation. Inflation. Idea of rate cuts. Bearish fundamentals. Rising inflation and weak jobs. Stagflation. Risk or rate cuts. Stagflation. You've been saying that for a year. Yeah. Dollar looks soft. Dollar looks soft to me. Now, the next step in that equation is you say, okay, Edgefinder's heat seeking that we've got some slowing economic data. And the best, when I say heat seeking, I mean, we've built a heat map for this purpose so that we can map it out visually. Dollar is getting softness, right? Soft reading. US stocks look even worse, in my opinion, because we have slowing economic readings while sticky inflation is still there. That combination is kind of rough. So you might say, well, isn't rising inflation bullish for the dollar? Yes. But rising inflation in combination with problematic slowdown in economic data, specifically jobs data, to me, that tilts bearish because the Fed is going to look at that labor data and say, inflation goes like this. It jumps all around. But labor data, that's a problem. That's a sticky problem that if you start to go into a recession, that is seriously concerning. And so I think that the Fed is going to lean a little bit more into the jobs market. This is what we've been saying on the channel, is the idea of a couple rate cuts this year makes sense. Economic data has been trending lower. This is like happening in slow motion. If you have the right tools in front of you, you've been watching these things turn red, just like I have, right? This is not a surprise that the Fed, I was very happy to see that I believe Powell is making the correct decision to pay attention to labor data. Now, not to be overly positive on Powell, because I do think he's moved a little bit slow on this. We've been saying this for a while. Look, economic data has been cooling. Yes, inflation's a little hot, but it's been coming in consistently lower than expectations, right? Is there a possibility that the Fed has made a mistake? This is the concern. Look, the red dot, for new fundamentalists in the room, the red dot is what analyst predictions were for inflation the last few months, okay? Inflation has been consistently expected to be higher than it actually came in at, right? Look at month by month, all of this fear around, oh, tariffs are going to cause a ton of inflation, right? It's a valid concern to say, hey, they might cause some inflation. But what the Fed has been doing that is problematic is they've been making the prediction inflation's going to be red hot due to tariffs. But what we have actually seen is that data has not formulated. We haven't seen huge surprises to the upside on inflation in a broad sense. Have we had some hot reads? Sure. The PPI was stronger than expected. But my point here is that the Fed is not supposed to be in the prediction business. The Fed is supposed to be in the data dependency business. And so if you have, inflation kind of somewhere hovering around here, but you have good evidence that the labor data is cooling, right? Inflation's kind of, it's a little sticky, but you have labor data that's straight up showing you signs that the economy is cooling off. Here's NFP, jobs data coming in softer over time. Here's ADP also softer over time, right? Look at the absolute kind of the direction of this chart. Look at unemployment rate has not spiked, but it can spike. So we want to keep an eye on that. Unemployment rate has risen a little bit, still at 4.2%, which is okay. But job openings, right? Job openings have been trending down. So what I'm showing you here is that we do have stagflation risk. And so in that circumstance, I think the Fed is going to pay attention to the jobs data now. And the concern is that they possibly could have been too late to this idea. And what do I mean by too late? What's the risk of being too late? Too late is that the economic data is already in a trend to the downside, which could impact negatively the economy in the coming months. So that is my perspective right now. Is I think we have a softer dollar for a little bit, or a continuation, I should say, of the soft data. We had a complete reversal. The fundamental direction of the dollar for me right now is maintaining to the downside. Technicals also look mostly bearish. We had a poke up to the 100 level. Look how we hit 100 on the DXY, completely reversed lower, and have struggled to regain any sort of structure there. So I'm looking for a push back down towards those lows and potentially beneath them. We'll see if we're correct about that. But I do think that we have potential for the dollar to continue to roll over to the downside. Stocks also look a little bit sketchy to me with that same scenario. If we're going to get into concern where inflation is still a risk and jobs data is soft, that dynamic does not look super favorable for me on stocks. So I'm not shorting the market because I don't like to short bull markets. But if we were to see a rollover, I would not be surprised in the least. If we were to see like, hey, yeah, we're getting a rate cut, but it's because we have problems in the data, that is not so bullish, right? So that is my perspective. I know it is a bit contrarian to fly a finger in the face to this bull market at all. It is not the popular thing to do. Everyone is sort of like, tally ho, we are going to new heights. But again, I just don't have the look. I am very systematic in what I do. What the Edge Finder is showing me, I respect, right? So I don't have a bullish reading on indices. Now, granted, I don't have a bearish reading on indices either. So I'm not shorting indices. Why? Because technicals still look pretty strong for the indices. So I can't really justify getting short the indices. But remember, it comes down to really two things: the fundamental analysis and technical analysis. I mean, sentiment also plays a role. So it comes down to three things. If these things are all aligned, I'm taking trades. If these things are mixed, I'm not taking trades. Right. So if I look at fundamental analysis, and I'm thinking for SPX, right? Sentiment we could look at in a second, but fundamentals definitely look rough. Technicals look strong. So this means no trade. Already no trade there, right? Because if we have fundamentals, meaning the macro is what I'm looking at for this, barring the strong earnings, right? Strong earnings have been a theme of the stock market, which is part of the reason why I think it's still up. Actually, probably a big reason as to why the market hasn't rolled over. But technicals still strong, right? Technicals, momentum of the market still looks good. Again, I'm talking about S&P. Fundamentals, though, sticky inflation, slowing jobs data, that is just where I have to bow out. Again, I have to take a step back and say, I got to be defensive in a market like that. So I've been trading other things. I'm looking at silver. I'm looking at gold for possible long setups. I'll pull up gold and silver here now on the screen. Let's take a look at silver really quick. Looking for pullbacks here today. I may be getting into a silver position. If I take that signal, I will share it inside of our VIP Discord. So stay tuned on that. I am watching for a possible pullback play here today. Gold, same concept here. I am looking, however, for this one to actually show signs of a breakout to the upside or a pullback into the bottom end of this range. I've said this 7,000 times. By the way, if you do want to join us inside of the VIP room, if you want to see the trades that I'm taking, when I take them, you can get notified directly to your phone. Send us a direct message. If you would like to join our support team here on the sidelines, can help you out with getting a membership. If you want to start trading with me, I would love to have you in the Discord. But I do want to reiterate that it is a place for serious traders who are looking to take their trading to the next level, who want to trade alongside traders who really do it. I mean, I show you guys all the time my live login brokerage. I am trading every single day. And if you want to trade alongside with me, I'd love to have you inside of the group. All the information, send a direct message to our support team. We'll be happy to set you up with that so that you can start trading with us. Okay, so gold here, definitely just still too choppy for me, but silver looks really good. I like silver to the long side. I'm looking for a pullback on the 4-hour chart here to this setup here. Also, by the way, if you send us a direct message, they can get you discounts for YouTube subscribers, just let them know you're watching the live stream, and they'll set you up with some discounts on the VIP group. So I like this 38.2% retracement. I like the 50% retracement. I like this area, generally speaking, for possible buys on silver. Nick, thanks for all the free education you provide. Helped me trading a lot. I just took a euro dollar buy. What do you think? So I'm already long euro dollar as well. I took this trade inside of the VIP group yesterday, actually. I bought, let me see, where did I get in on? Hold on, pull this up. So I got in yesterday on euro dollar 1.162. So I ended up getting a pretty good entry on this. So right around here, I got in. So I'm still in the trade. I do think that there is upside for the euro dollar. We pretty much retraced 100% of the, well, let's call it 98% of the move last Friday. And I took that as kind of a, okay, I think, the risk reward for entry looks pretty good. Take a look at the daily chart. I still think you have very nice price momentum to the upside for euro dollar this year. I think that's likely to continue. So I'm looking for a push on euro dollar back towards those highs. If this level does not work out, if we move lower, I'd be interested also at like the 114 level for a possible buy there as well. So if this entry doesn't work out, I'm watching 114 as well. But I do favor euro dollar upside. It is a bullish rating within the Edge Finder currently. I'm looking for a move back to the highs, and we'll see if we can get something there. But yes, that trade and all of my trades, like I said just a second ago, are shared inside of our VIP room. You can keep up to date with everything that I am trading, currency side, commodity side, gold, silver, oil, and of course, indices as well. So if you want access to that, send us a direct message on our website, a1trading.com, and our support team can get you set up with a membership. Pound dollar also looks good. You had a pullback into this level of support. I'm watching this, but since I'm already long euro dollar, I'm going to probably pass on pound dollar. I was also looking at the New Zealand dollar. Nice little kind of found support in this area, shot off of it, maybe a higher low here today. You may be sort of starting to see a wave higher here for the Kiwi. So I do like that one as well. Let's take a look at some of the other dollar crosses. Dollar yen. Dollar yen looks bearish to me. I think we could see this swing back down towards the bottom end of the range, which would also kind of likely coincide with a cool off in the stock market, which I do think is also potentially happening soon. We'll see. It's very hard to time something that's in a bull market. Like I'm not going to try and, I've said that over and over, but I'm not going to short the stock market because it's in an uptrend. It's really that simple. The market wants to go up. You can try and fight that, but you're more likely to lose than win if the market is just trending, right? But to me, the risk to reward here just does not look attractive to long stocks at these levels. PE ratios across stocks are very expensive right now. I would like
All right, everybody. Our entire office just lost power. So, that is bright. Let me switch chairs. Yeah, I don't know. We're gonna see if we get power back on in a second, I guess. Yeah, I don't know. This happened once before when somebody was trying to get on the elevator. But this was like at the end of the day, and it came right back on. But it doesn't look like it's coming right back on. So I don't know what's going on. You usually lose power when you're in a good trade. Hey, sometimes the market just don't want you to win. Rush to do your hair this morning. This is all natural, baby. This is shampoo and water, and that's the extent of it because I don't have time to do anything else. We're just going to talk about my morning routine. Brush my teeth. Sure did. Yeah. Marco is here. Marco could take over the stream for us. Marco, we lost power. So I've hopped in here and I started stalling. I'm using my hotspot since we don't actually have Wi-Fi. Marco, can you hop over and take over? All right, I'm gonna run a quick break. What's my thoughts on food? Love food. I'm gonna run a quick break. Marco's gonna take over the stream. If we get power back, maybe Nick will hop back in with Marco. If not, the show will go on because luckily we have such incredible guests that can take over the show remotely. So Marco is going to be taking over right after this.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. And I do have my comment section open on the side. So if you have any questions, chart requests, psychology, Lisa Cook, you can put it in the chat. So yeah, the word for today, or two words for today, is the Lisa Cook incident. So she is basically part of the Fed and she just got fired by Trump. Can he do it? I'm not sure. He did it anyway. So she's not going quietly, and I guess there's going to be some sort of a legal battle, but the DXY definitely had a reaction on the 1 hour chart. I think it was somewhere around here. Maybe we sold off a little bit, so I can see some comments about that. Is it a really important story? No, it's not a really important story. I think it's just more noise, and you shouldn't really base your trading decisions on that. So lately, also I wanted to comment, we had a lot of noise surrounding the Fed. The Fed has been tiptoeing back and forth between being hawkish, dovish, rate cut expectations. We had a 90% chance of a rate cut in September, then it dropped to 70, then it's back to 80. So we have just been all over the place. And during times like these, during times where there is a lot of uncertainty and where the Fed keeps tiptoeing, it is best to focus on the data. So I know most of you are waiting for rate cuts, and most of you expect 2 to 3 rate cuts for the Fed this year. But I would say be a bit careful. Still, you need to focus on the data. And actually, before the meeting on the 17th of September, we still have NFP, which is going to tell us more about the jobs market. We still have CPI. We still have PPI. So we have the jobs information and we have the inflation information as well. Okay, let's go, Marco. Thank you. FX12 says this guy is just yapping. He never takes a trade. Pretty much. FX Bashi, hey, what's up? What's up, FX Bashi? Alafi, what's up? Welcome to the stream. So basically, my opinion is, don't think that the rate cuts are definite. I do think the Fed can still flip if you get a good NFP and if you get more rising inflation in the CPI and PPI. Okay, so I do have some USD short positions. Okay, one USD short position that is on the Euro US dollar. So Euro US dollar long right here. But it's not a lot of risk, and I'm looking to buy silver. So I'm looking to get in on a buy setup on silver, which is another short dollar trade. But again, I'm not gonna go with massive risk. I'm still being a bit careful. I'm waiting for those 3 data points that I just told you about. So let's get started with the general analysis of the stream. Bud says that intro is a great bit of information. Well, thank you for the feedback. I do think it's important to monitor what the Fed is doing, what the Jackson Hole meeting was about, and what they will do on the 17th of September. Max says, I'm looking oil pushing swing after touching 61. I do remember you mentioning oil. So for me personally, oil is very much impacted, as I mentioned probably before, very much impacted by geopolitics. So I don't pay a lot of attention to oil. And right now it seems a little bit flat, in my opinion, on this daily chart. It seems a little bit flat. And again, if there's like Israel and Iran, and then the conflict dies down, then there's some news about Russia and US, some tariff information, price goes up, price goes down. So kind of tough to get a reading, kind of tough to get a pure fundamental reading, and you could get taken out of your position very, very easily. So let's see. Max said that he's watching the 61 level. Okay, cool. So you probably went long here. I don't quite remember. I don't quite remember if you bought right here, or if you can give me more information about that. So what I wanted to do is I wanted to check out the DXY and I wanted to check out the US stock market. So let's take a look. For the DXY, my overall stance is neutral / a little bit bearish. Okay, but right now it's a bit more neutral, I would say, than bearish. So I think we're a bit flat. I think the chart paints a nice picture where you can see that we're definitely being flat. And I'm waiting for more information. I'm waiting for the data releases that I mentioned. So, okay, Max says, actually, FX Bashi says, Marco, I was thinking about what you said before about my track record. My master account is with IC Markets, so that's okay, right? Because it's regulated broker and it is linked to a MyFX book. Yeah, sure. So if you want to do a track record, I have a track record and I'm with IC Markets EU section. Okay, so you have the IC Markets Global and you have IC Markets EU. But both of those brokers are regulated. And if you just connect your account to a MyFX book, I think that's a good enough track record to show to people. And it's a verified track record, you can say. So that's a great option. Marco Noah was at 62 long, stop at 61. Okay, cool. So let's quickly go back to that. So long at 62, stop at 61. Well, looks like you just stayed in this trade, and right now it looks to be pushing to the upside a little bit. So congrats on this position. And yeah, hopefully it does keep going to the upside. I cannot really give you a lot of information on oil. I'm I don't have a lot of insights about oil right now. So the DXY we covered. What about the stock market? S&P. I'm going to focus on the NASDAQ since I'm looking for buy setups on the NASDAQ. And I'm looking at these levels. So on Friday, we had a quite big push to the upside during Powell's speech, during Jackson Hole. And in that speech, Powell switched from a more hawkish tone that he had for most of 2025. He switched to a more dovish tone. So that is why also people expect rate cuts, and people think that the rate cuts are definite. But I would say it could be more noise because you're not getting actual data. You're just getting a switch of the tone of Powell. You're getting Lisa Cook being fired. You're getting all of these events that are not really directly connected to the data, but the market is still reacting to them. So that's not a great sign. That's not really the sort of news you should base your trading on. I would say data is number one. Data is the most powerful. So for the NASDAQ, what I do know is I think we're a bit overextended. I think the momentum has slowed down a little bit. I think a pullback has already started. Institutions are short last time that I checked. The retail was heavily long. There was like pretty massive FOMO to get in on the uptrend. And I would say that is the best time to look for a pullback and to actually get in on a support level. Okay, so I'm looking at these two levels of support. And when the price goes into them, I will look for setups. So I will look for trades. I would like to see a bit more of a pullback, let's say 5%, 6% pullback. That would fit the plan. At this current point, I still believe we are a bit overextended. Okay, so still a little bit overextended. I do think we can pull back. As I mentioned, we had this event on Friday, big pump to the upside, but it faded. Like if you check the euro dollar, massive push to the upside and then a massive fade of the move, massive retrace. If you check on the DXY, massive drop on Friday and then on Monday it fades. So pretty much like nothing happened. And that's what you get when there is news that's not really concrete data, but more of just a, let's say, an anticipation that something will happen, or a rumor or noise, general noise. You get a huge move and then it usually fades, meaning push to the upside, fade. That's what I mean when I say when a move fades, or push to the downside and then it goes back to the initial level. So overall, I am bullish on the US stock market. I am looking for buy setups, but not at this level. Pretty much the same opinion as Nick. I do think artificial intelligence should be pretty bullish. So artificial intelligence should be pretty bullish for the NASDAQ because artificial intelligence should touch or impact the technology companies first, thus improving profit margins, thus pushing the stock market to the upside. It has already done so. If you look at the performance of the NASDAQ compared to the S&P, let's say from the bottom of this sell-off, NASDAQ is up 43%. S&P from the bottom of the sell-off, 33%. So definite outperformance of the NASDAQ, as it happens usually. So the NASDAQ is king, or has been king for the last few years, definitely. Okay, let's see. Is Ethereum still bullish? And then he gets banned. Okay, I saw a lot of spam coming from Kelvin, but we're gonna check Ethereum. So let's see, Ethereum. Is Ethereum still bullish? Well, in my opinion, it is, but I have a big problem with Ethereum because I cannot read the fundamentals. I can only rely on technical analysis. There was a massive breakout to the upside, massive explosion to the upside here. Okay, massive explosion. I don't know why it happened. I think it has to do something with a lot of companies buying Ethereum instead of holding US dollars, thus pushing Ethereum prices to the upside and also pushing the prices of their company to the upside. Because if a company holds a lot of Ethereum, as the price of Ethereum goes up, so does the value of the company. So I think that was a big reason why this exploded to the upside. But again, I have a much easier reading on Bitcoin because Bitcoin is heavily connected with the NASDAQ. It kind of acts like a technology stock. So when the NASDAQ moves, Bitcoin is very likely to move as well, since it is a very risk-on heavy asset. But if you're wondering about Ethereum just in terms of technical analysis, well, I would say a trend line here is still getting respected. We're still sort of respecting this trend line, right? As we can see, and we're getting a little bit of a sell-off in these legs. In terms of resistance, definitely we touched the all-time highs. Yeah, I think this is the all-time high. So we actually touched the all-time high at 4. Did we touch 5 grand? Let's see. No, we didn't. So we didn't yet hit 5,000. We were very close. So 4,955. And that was on Sunday. Damn. So that was actually yesterday. No, it wasn't yesterday, but 2 days ago, basically. Let's see. So yeah, on Ethereum, I think we can still push up. I think we can hit all-time highs. I think we can go above 5K. Why will it happen? I don't know. The technical trend is still not heavily broken. We had one massive sell-off yesterday. Okay, so one massive sell-off yesterday, but I would say that overall trend is still intact, and we could easily go to the upside a bit more. One problem though, Bitcoin is heavily pulling back. So Bitcoin looks to be bearish right now. It definitely has a lot of selling pressure. So that's not the best story for Ethereum. You usually want to see both of them moving to the upside in tandem. Talk about BLS job data, yearly jobs revision expected on September 9th. I'm not sure exactly what you're talking about, so I have to do some research on that. I can't help you right now. Okay. Okay, so Max actually got stopped out of the oil position. Well, I'm sorry to hear that. Yeah, it looks like on my data we did not touch 61. He doesn't trade commodities other than gold and silver. Yeah, basically. So I focus on gold and silver. Can NVIDIA earnings affect prices tomorrow? Yes, they can. They can, because NVIDIA makes up a huge chunk of the NASDAQ and of the S&P 500. Okay, so if you go to NVIDIA Corporation, wow, this is just a massive, massive uptrend. So we have earnings, as you mentioned, this week, and looks like they are tomorrow. And if you get some good earnings, if NVIDIA pumps to the upside a bit more, to be honest, right now, NVIDIA looks to be crazy bullish, crazy bullish. This sort of seems like a bubble. This is what Bitcoin used to look like in 2018. So not the best looking chart, if I'm being honest. It would be kind of tough for me to buy this chart because it looks so extremely bullish, but anything can happen in the markets. And if we do get good earnings, NVIDIA goes up, it could bring with it the S&P and the NASDAQ. So I think NVIDIA represents 7% of the S&P 500 or 7% of the NASDAQ. I'm not exactly sure, but it's a huge company. It's a huge chunk of the indices. And yes, definite reaction can be expected. A lot of traders that I'm closely following are watching NVIDIA earnings. They are aware that NVIDIA has a huge impact on the general markets, and it is sort of one of the most important news releases this month, or you could say this week. Okay, what's your take on USD Swiss? Let's see, USD Swiss, the CHF. Well, it's kind of flat right now. It's kind of flat right here. Let me just quickly bring up my Edge Finder. I'm sorry I did not put my trading view in my browser, so I cannot bring up the Edge Finder for you guys, but I have it here on the side. So let me see, USD CHF, USD CHF. Very bearish reading. Okay, a very bearish reading. So we have a massively negative score on the Edge Finder. For me personally, I'm I'm a bit neutral on the dollar. If I had to give you a bias, it would be a bearish one. As far as technical analysis goes, I think we're a little bit flat right here in this level. So I personally would not take a trade on USD Swiss. If we get more clarity, NFP, PPI, CPI, if we get more clarity, I will consider USD Swiss since it's getting such a very bearish reading on the edge finder. But right now, I don't want huge exposure on the dollar. So as I mentioned, I have my euro dollar position. I'm looking for buy setups on silver, and those are all betting on dollar weakness. So do I want to have huge exposure? No. Do I advise taking setups on USD Swiss? Well, I don't advise anything. It's just for educational purposes. But I would say to possibly wait for some more bearish pressure on the daily chart for a possible breakout out of this flat range. It just looks a little bit flat. If you get maybe one more big leg to the downside that goes below the 20 MA, breaks up the range, I think that could be interesting. Okay. Boring markets today. Well, the markets have been kind of boring. I would say the volatility, the VIX is just going lower and lower and lower. So the volatility is dying down. As the volatility dies down, so does the action in the markets. If you look at the DXY, it's been flat. It's been pretty flat. JXY, it's been kind of flat as well. So you're not getting a lot of volatility. You're not getting a lot of momentum. You're not getting a lot of sustained uptrends or downtrends. What's your forecast on NVIDIA and its impact on the NASDAQ? I don't have a forecast on NVIDIA. I don't look at individual stocks, but I can tell you, I can repeat my forecast for the NASDAQ. My forecast for the NASDAQ is short-term bearish, long-term bullish. So I have my levels of support. I have my levels drawn out, and I'm looking for pullbacks to these areas, and then I'm looking for buy setups. Do I want to buy right now? No, I personally don't. I think we're a bit overextended. I think the sentiment of the retail people is very bullish, very ecstatic, and also erratic, which is not the best sign if I want to take a buy setup. So what could happen? NVIDIA could crush earnings. We could get a pump on the NASDAQ to the upside. Would I then buy? No, I would not, because then we would be even more overextended. So then I would need to wait for the next pullback. Maybe we continue to the upside for the next month. So I'd wait for a bigger pullback after that. I'm not going to chase the price. Maybe I miss out on huge percentage, but at least I'm following the plan, and at least I'm not buying the highs. I could have bought here. I could have bought here while the price was heavily overextended. I could have bought, let's say, here and made money. So for me, it's more of a gamble if you're going to buy on the highs. It's not really the best possible position. It's not really the best area where you can get a nice reward to risk. If you get in a bit lower, you can have a tight stop loss and you can aim for the highs. Worst case, it hits the highs and you bank some decent percentage. Best case, you get taken in, price goes up and continues trending higher. Okay. So that's why I like to look for pullbacks to get a really positive reward to risk. Ballout was yapping about shorting the DXY earlier and left. Okay, cool. Would I short the DXY? Well, as I mentioned, I'm a bit neutral, so I would not look to go too heavy on USD shorts. Max says the last push was OG selling a lot of Bitcoin, buying crazy amount of Ethereum and then selling it. Well, could be. It's pretty interesting that Bitcoin has had a massive sell-off. I mean, it's a pretty decent sell-off from the highs. What is it, like 12%? That's pretty heavy. While Ethereum has been pushing into the all-time highs, and it actually hit all-time highs. Yeah, on the weekend. I think it did. As I'm seeing on my charts, we have hit all-time highs. So pretty crazy stuff. And in crypto, the markets are much smaller. So the players that have huge money can push the markets by a big amount, right? That's something that doesn't really happen on the NASDAQ, doesn't really happen on the S&P. It's because of the market cap. On crypto coins such as Ethereum or Ripple, or even the smaller ones, one big whale can actually push the price. Ballout has a point about shorting the DXY because of the wave structure it's presenting. Okay, cool. If you're trading Elliott waves, maybe it works. I personally don't think Elliott waves work on their own. I don't think you have a huge edge. Let me say it like that. You don't have a huge edge with solely using technical analysis or solely using Elliott waves. But if you can do Elliott waves plus some fundamentals, plus some macro, plus some support and resistance, well, then you have multiple confluences to look for setups. What's your opinion on oil? We already went through oil. On oil, I am neutral, and oil is heavily impacted by geopolitics. So it's tough for me to get a reading, tough for me to decide to take a trade since it's so volatile. This was basically Israel and Iran. This was the cease of the conflict. This was USA and Russia. This was when the drama died down. So just all over the place. Okay. Let's see if we have some more requests. USD Swiss. So we already did USD Swiss. Are you in any positions? Yeah. So I am in. Whoop. What happened there? So I am in euro dollar long from the 13th of August. So from the 13th of August, trailing my position, maybe I get taken out. We were pretty close to the stop loss on Friday. Then we had Powell come out and be dovish. Then we had the fade of the move. Then we had Lisa Cook and some other things. So now the dollar is again losing value. What's going to happen? I don't know. But as far as I can see, we're just so flat, so boring. I'm paying swaps, so not the best story. But I'm holding on to the position. It fit my plan. Still fits the plan. Edgefinder was bullish, massive uptrend, expecting dollar weakness, betting on euro strength, small risk, and yeah, that's basically the setup. Euro GBP. Euro GBP I actually like even more than euro dollar. The reason is I'm pretty bullish on the euro. Euro is getting some good numbers. It's getting bought up quite nicely as well, but the pound seems to be pretty weak. And I'm forecasting more weakness for the pound. The reason is stagflation. So UK has bad jobs data, bad GDP data. You can look at it on the Edgefinder. Like the jobs data has been pretty bad. Unemployment is rising. GDP is all over the place. They cannot seem to get steady positive GDP growth. You have inflation, which is rising. That's called stagflation. Usually stagflation is bearish for the underlying currency. Not just bearish, but very bearish. So I'm betting on euro strength, but more so I'm betting on pound weakness. And again, sitting at break even, swaps are pretty high. I'm not going to lie. So swaps haven't been the best thing with this trade. But for now, I'm holding this position. Nothing has drastically changed. It still fits the plan. And if it does continue to the upside, I will trail my stop loss. So we can cover gold and silver. I can see people want to see gold and silver. I'm going to tell you exactly what my game plan is to look for setups. But for gold, well, it's been pretty much the same stance since I would say the 22nd of May. We have just been super flat, super range bound. You have a clear range. You have a clear level of resistance, clear level of support. Let me actually put an alert here. So clear support, clear resistance. We're super flat. For gold, I would expect more range-bound price action for now. If you're asking about the macro, well, the macro is there's still a little bit of tariff uncertainty. In the last few weeks, it has died down a little bit, but again, it's still present. So tariff uncertainty is still present for some countries. I think China could be an example. But basically, overall, I am bullish on gold, like long term, because there's a big uptrend. Massive uptrend. Now, if we do get rate cuts, if we get dollar weakness, gold should go to the upside. So that's another bullish confluence for gold. As it stands, I cannot take a trade. If I take a trade here, it is very likely that I'll get stopped out before the big move happens. It's very likely I'll get chopped before the big push to the upside happens. So looking for a breakout of the level and then a buy setup, or maybe I'm also considering getting in on the support. Okay, so it would be much better for me to get in on the bottom of the range than in the middle. In the middle, it's just a very bad position. I cannot have good stop loss placement. I cannot have a good reward to risk. I'm just buying in the middle and hoping for the best. The edge behind that trade is not good. But getting in on an initial position right here on the bottom of the range, I can target the highs. So worst case, I take profit near the highs. Even if there's no massive breakout, I can still make some profits. So the idea is to potentially get in on a setup a bit lower and then see if price breaks out and get in on another setup that goes higher. Again, this initial position would be pretty small risk. I would not be massively betting on gold to continue. So that's the general game plan. I think it's pretty similar to what Nick has. For silver, I was actively looking for buy setups, and then we sold off some more. So silver, same macro story. There's still some tariff uncertainty present. Technical analysis is still very bullish. We're in a massive uptrend. Silver, for me, looks better than gold. Gold has been really flat for months now. Silver has been steadily grinding higher, even respecting the 20 EMA quite nicely. And on Friday, we broke out of a key level. So if we do get the rate cuts, we could see further strength on silver. What is the game plan? When would I look for entries on silver? Well, if we do get a bit more bullish pressure, I will take a buy setup. So if we get something like this on the 1 hour chart, I will look for buy setups. On the daily chart, you can see I have my alert set. So my alert is set. And if we just push up a little bit more, I'll be pretty happy to get in on some buy setups on silver. I don't think I even need to see silver break these all-time highs or break this swing high. I would be pretty happy to get in with an initial position. Again, because of all of those things I mentioned for the dollar, the uncertainty around the dollar, I won't take a huge position, like maybe 0.25, maybe 0.5% of my capital on this buy position. That's the general idea. Okay, is it possible to trade gold based purely on technical analysis? I'm sure it is. I'm sure there are some traders who can do it. I personally would say your edge is pretty small by using solely technical analysis. You can improve your edge quite a lot if you are aware of the fundamentals and the macroeconomic story. For example, if you are following gold during the tariff craze, and you knew to be a bit more aggressive on gold because gold goes up during times of uncertainty, during times of risk off, you could have been aggressive on buying and you could have made a lot of percentage if you were aware of the fundamentals, if you were aware of the macro story. So that is what I mean, that you can improve your edge if you combine more types of analysis. Now, do I know any trader who has a long-term track record trading solely using technical analysis? I don't. I just don't. Maybe there are a couple of traders and market wizards, but as far as I know, there is no trader trading for more than 5 or 10 years who uses solely technical analysis, has a verified track record, and makes a huge chunk of money from the markets. So it just goes to show that using fundamentals, macro story, and technicals combined is easier to get an edge. It's more efficient. You get a better edge. That's why so many professionals use all three and they don't just focus on one. I know technical analysis is super easy, but what is easy doesn't make money. Gold is ranging at the moment. Yes. Why is the VIX so dead? Because of summer vacation? Well, it could be it. We can take a look at some seasonality data. But generally, maybe the markets are waiting to see what will happen with the rate cuts. Maybe the markets are waiting out the Fed. There were crazy tariffs, so maybe the markets are waiting to see the conclusion of the tariffs. I don't have a definite answer for you. There's so many parts of an economy. There's so many parts of a market. So there can be so many reasons why the VIX is down. I don't think the reason is that it's August, so that people are on vacation. I've seen some massive moves in August happen. For example, on the JPY pairs in 2024, there was a massive move in July and August. So you never know when the momentum can kick in. Yes, you can look for some seasonality indicators on the Edge Finder, for example, but there's often multiple reasons why the VIX is going lower. Okay, September is notoriously slow for stocks. Yeah, that's some seasonality right there. Your take on Euro GBP, Marco. Okay, let me see. There's a bunch of comments. So, okay, so looks like I'm nearing the end of my segment, and there's a bunch of comments. You can catch me tomorrow on the stream. For this last segment, I'll do the Euro GBP just to finish things up. Euro GBP. Okay, so I actually covered it. I'm sorry, I kind of got lost. But basically, Euro GBP, to summarize, I'm in a buy position. Euro, I'm bullish on. Pound, I'm bearish on. I'm expecting a stagflation scenario in the UK. I think that's a very bearish case for the GBP. The daily is in an uptrend. I'm trailing my position, and that's generally it. So thank you guys very much for watching. You can catch me tomorrow on this stream, and you can ask me more questions. So yeah, good luck in the markets. See you.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Apologies, I was muted. I said good morning and good afternoon. I hope you're all doing well. I've got a fan on next to me, so just let me know. Hopefully you can hear me okay. Hopefully it's not like a windy sound, but it should be okay, I think. So, yeah, it's been a while. I hope everyone's doing well. I've got some analysis and some bits and pieces to show you. There's nothing overly new, I don't think. Although we had Jackson Hole, was it last Friday over the weekend? It seems like everyone's talking about the Fed, but no one's talking about the Bank of Japan. So I'm fairly sure that either Nick or Marco or someone will have already talked to you about the Fed. So I'll go over the Bank of Japan. Just to quickly summarize, basically saying that the Bank of Japan seems like they're ready to continue the rate hiking cycle or the path to normalization. So I'm not going to go over all of this. But what I did find interesting, which maybe is common knowledge, but I didn't know, more than half of the labor force growth in 2023 to 2024 in Japan came from foreign workers, which is a bit concerning. And that comes down to the age demographic. Obviously, a lot of Asian countries, I think, not North Korea, South Korea is probably North Korea too, actually. South Korea is very similar in the sense that they have more old people than young people, which obviously over a long period of time is going to be a massive problem. And that's a bit of a concern across the world, actually, in quite a few different places. So moving on, let's talk about something a bit more interesting. We've got silver, So I've been, I was away for the past 2 weeks, give or take, taking care of some business in London. So I came back on Friday. So yeah, been catching up. So silver towards 22 to sorry, not 22 to 42 to $44 an ounce. So we've got some targets here by UBS for up to the third quarter of 2026. Now, of course, take it very, very loosely, just a grain of salt, because things change, especially over a time horizon like that. But the ones I'm focusing on are the fourth quarter 2025 and the second quarter of 2026. We've also got a note by UBS, essentially just telling us to buy dips. So that's interesting. So buy dips, essentially just below $36 an ounce. So that's the plan. There is nothing complicated here. So I'm not in silver. I'm not involved just yet. I'm waiting to see if we can get back down to these lows. You can see I've already got an alert there. So I can start accumulating some silver. Now, this will be probably a DCA position, not just a typical entry stop loss take profit. So I'd quite happily buy a very, very small amount of silver here, buy a little bit more towards the middle part of 36, and then buy a little bit more here, and just see how these three positions start running, looking for the fourth quarter of 2025 target to get hit. Naveen, hello. Bashi, Royal Trades, good to see you all. Missed you guys, it's been a while. The same concept applies to gold. So I'm quite happy to be a buyer of gold. Now, there's a while, quite a long period actually, where I was pretty stagnant on gold. I found it very, very difficult to determine whether I wanted to be a buyer or a seller. However, now it seems Fed rate cuts are pretty much, set to happen. I don't think there's really anyone that would argue that we're not going to see a Fed rate cut in September. Of course, actually, you could argue it, but I think generally speaking, it's pretty much set that we're going to see one. So I quite happily look to buy, I quite happily be a buyer of gold as well, if we can come back down to these lows. Silver and gold have a very, very similar price action. So there's not really too much to discuss there. However, what did interest me was here. According to historical trends, the gold to silver ratio is 89.7x. Could decline to 75 to 80x if growth accelerates meaningfully. With our gold forecast at 3,700, this would imply silver price of 45 to 50. However, we believe it's too early to reflect such levels. So again, something for you to maybe note down. So yeah, that's pretty much it. So silver and gold, I'm quite happy to be a buyer long term. Nat gas. This one's tricky because I don't trade nat gas. However, it did pique my interest because, again, I saw a report, UBS just talking about their targets. And I was like, I don't watch nat gas. I don't trade it. I don't look at it, but I'll go and just take a peek. So I was looking at it on the daily time frame, and just from technicals, it looks quite convincing. Although from what I have seen on the fundamental view, there really isn't that much to support nat gas right now. So we've got a very clean trend line here on the daily. We're coming into the bottom of our 200 Bollinger here. So maybe we could see some sort of mean reversion, some sort of pullback, but I'm not going to be trading from that. I need to wait for something. Again, I need to do a bit more research. So I definitely wouldn't say that looking at nat gas just because I am is a wise idea. It's not my area of expertise whatsoever. Sorry, just bear with me. I'm just watching some of the charts on a different monitor, just paying attention. Okay. Lee, good to see you. Andre, GBP USD. Yeah, we'll go over, we'll make our way through the charts, don't worry. Dollar ZAR, actually, now would be a good time to pull up the Edge Finder. So again, silver and gold are here. Pound CAD's bullish, although I can't really justify being a buyer. I'm already in £1 long position. And with, as Marco said, actually, stagflation risks in the UK are quite high right now. And I don't like the UK economy whatsoever. So I can't allow myself to be overexposed. In my case, overexposed to the pound is any more than one position. We've got CAD yen, CAD Swiss, dollar ZAR, dollar yen, and dollar Swiss. So my watch list right now is pretty much just copy and paste of the Edge Finder. So I'm looking to be a seller of the dollar ZAR. Very nice. Yeah, coming into quite a nice technical area here. Pulling into our 200 moving average. within an overall downtrend. So it might be a clean idea to look for some short positions into 17.2, which would then put us back at the low from November 2024. So that's sort of the rough idea. Again, $ZAR is not something I really pay any attention to on a daily basis, so I need to do a bit more research there before taking the trade. However, New Zealand yen, I think, has some legs. So we already know that the RBNZ cut rates. However, what we also know is right here, the RBNZ cuts rates to 25 basis points, but considered 50 basis points. We're now forecasting, we now forecast 25 basis point cuts in October and November down to 2.5. So quick flash lesson. What do we have if we have the New Zealand, the RBNZ cutting rates? Possibly twice this year down to 2.5. But then we've also got the Bank of Japan continuing their path to normalization. They're currently at 0.5. Well, let's say they hike up to, let's say 1%. Obviously, they're not going to do a half a percentage rate hike in one go, but it could get there. And then we've got the RBNZ coming back down to 2.5. Well, the yield gap here, the rate differential lowers, reduces carry trade interest, and very likely we will see this market continue lower. So it's very simple. We've obviously got some other underlying economics that we can go into slightly later as well. Same idea here, get my words mixed up. Same idea here with the dollar yen. Gold should have another drop. It's definitely possible. I hope it does, so I could look to buy. James, can we see what Bashi CHF and GJ is looking like on top setups? Yes. What's your take on USD JPY after BOJ? Good timing there. I have no idea how to say your name. Mizuni. We'll go on to dollar yen shortly. I'm just going to pull up this data for Bashi. So what did you want? You wanted pound Swiss and pound yen. Where's pound Swiss? Pound yen's down here, so pretty neutral. And pound Swiss, I don't see pound Swiss. Maybe I'm being blind, but whatever. You can rewind and pause it. So dollar yen, quite happy to sit in the bearish camp. It's been a bit of a wild ride on the dollar. I was very, very bullish for a period. Well, very, very bullish is an overstatement. I was pretty bullish for a while on the dollar. However, it seems like rate cuts are finally happening here. So this is the Jackson Hole and Fed speech move that we had, where the Fed Chair Powell was pretty dovish, basically told us that we're going to have rate cuts. We obviously saw the dollar come down, and we've had a slight correction here. So I would expect the dollar to continue lower for the rest of the week. So we could see something like this, but overall, yeah, I would like to be a seller on the dollar at the moment. And as we already discussed, the Bank of Japan's looking to hike rates. We've also got some economic weakness outside of the central bank positioning. Hold on, where's the heat maps here? Yeah, there we go. So US dollar's got a score of 42, yen's got 63. So the dollar is actually the weakest, just slightly behind the Swiss. So yeah, overall, quite happy to be selling dollars. I don't think there's anything wrong with that idea just yet. I've actually got, again, this is the last time I'm going to pull this up because I don't want to bore you guys with reading stuff, but dollar yen's been one that I'm paying quite close attention to. So we've got MUFG already in a short position. We've got Goldman Sachs already in a short position. We've got Nomura Research already in a short position. Edgefinder's bearish, as we already know. US inflation's coming down, although holding around 2.7 at the moment. Inflation at Japan holds above 3%, which again does reinforce our rate hike narrative. Interest rates in Japan, you can see very clean upside movements there, very typical interest rate hiking behavior. And the Fed is about to cut again. So we've got that divergence. What else do we have here? The yield gap. So I'll pull up the yield gap on the site for you so you can see that's a bit better. Hold on. Let's get rid of that and add Japan's 10-year here. So this is exactly the same as what I was mentioning with, was it New Zealand yen? I just spoke about the yields here. So if we get the Fed cutting rates, essentially we're going to expect these yields to come down. If we get the Bank of Japan hiking, essentially we're going to get them going up. So it's more attractive. Well, currently dollar yen is still attractive to long side for carry trades. However, over the next 1 year, maybe a little bit longer, depends on how long these policies last for, we could definitely see dollar yen continue lower. So yeah, hopefully that answers your question. Ak, yeah, it's been a long time. I'm good, my friend. Hope you're well as well. Yeah, I've not really been doing much. I've not really been that active, to be honest, on social media or charts or anything. I've been sort of just doing my own thing. Euro AUD looking very bullish. What's your take? Okay, we'll get onto euro dollar shortly. So dollar Swiss, this one is also, I think, is this the most bearish or one of the most? Let me just double check. Yeah, dollar Swiss is the most bearish with a score of 13. Very close to, in fact, it's one of the highest or lowest readings I've seen on the Edge Finder in a long time. So dollar Swiss is pretty simple, to be honest with you. I think we're pretty much just stuck in this sideways range. So it's now really a case of just selling if we can break below the range, or if we can come up and fail to hold above the range, then we could be a seller somewhere up here. Back into the lows from July. So yeah, not that far away. So something like this, I think, would be ideal. However, that's assuming the dollar is going to catch enough strength to get there, which it could, but I'm not going to bank on it. So something like this seems a little bit more appealing in my view right now. New Zealand dollar, I'd quite like to be a buyer, but not yet. That trade's definitely not ready. And euro pound, I think, would be quite nice for a long position. I was in a series of DCA shorts on this, actually. I managed to get out at break even right here. So I was selling. Let me do this. Yeah, I was selling this move here. Luckily, I managed to get an average price pretty much in this area. So I got out pretty unscathed, actually, collected some swaps. So that was quite smooth, although it was a bit of a hectic one to be stuck in. So the reason I got out is because I flipped bias. I think we are going to go higher on euro pound. I think Marco touched on this as well before I came on. I completely agree with his idea. I think the pound is facing some problems, specifically within like the stagflation fears. I think we've also got the autumn budget coming. And yeah, overall, the UK is in a very, very tricky spot, not just on the economic front, but also just on I don't even know what the word is, like a humanitarian view, maybe. Just, I don't know. It just doesn't, it's not a good place to be right now. I think we're going to have serious problems down the road with the UK. Okay, Euro Australian. Let's have a look. Where is that? Here. I don't see anything for it, to be honest. Just bear with me for a second. That's funny. Yeah, you say it looks bullish. However, there is literally zilch. There is nothing there for Euro Australian right now. Retail is pretty much 50-50. COT is flat. Seasonality is bullish. You've got that. Trend reading, manufacturing is negative, services negative, retail sales negative. So they're favoring short-sided positioning. Inflation is bullish and unemployment rate's bullish. But all of that equals zero. So it depends on exactly how you trade. If you're using the Edge Finder and you follow fundamentals, there's not really anything here to warrant that type of long position, to be honest, in my view. The other way to look at it, I suppose, is we've got kind of a resistance through here. Price is broken below and failing to break back above. So you could argue, which I'm not, because again, I don't think there's really any directional play I could make here. But there is also the argument that this is a break and retest to the downside. Or, you know, obviously we could come back up. So they're the two situations that I see this market in right now. Do you think dollar rate cut weakness is already priced in? Yeah, absolutely. I think the idea of the September cut is priced in for sure. But of course, don't forget we've got more data coming. So it's, you know, we could increase bets. There's hold on, let me just think of what my wording is here. Increased bets of further rate cuts, not just September. So there's definitely room for the dollar to go further to the downside. I'm actually not sure what news we've got coming out this week. Let me just see for the dollar. So we've got GDP annualized tomorrow. Oh, no, sorry, on Thursday. PCE on Friday. That's it, actually. It's a pretty quiet week. Interesting. Okay, so Naveen is looking to short Euro Aussie. So I guess if again, I can't say your name, Mizunizu, whatever if you go long Euro Aussie and then Naveen goes short Euro Aussie, one of you has got to win. Surely. So unless you both get chopped up, but you know, there's only one winner. Thoughts on oil? I was looking at oil. However, I don't see any reason to be a buyer or a seller. Where's my... Oh, it's the wrong one. Hold on. Just bear with me. I've got my oil thing down here. Yeah, oil long. So geopolitical risks elevated. Optimism over Russia-Ukraine ceasefire is fading. Russia has stepped up strikes. And the new risk of sanctions grow. The US plans additional tariffs on India for Russian crude imports, which could disrupt flows. Refinery outages are tightening. Structural demand weakness lingers, but geopolitics dominate short term as keeps oil supported into autumn. So there is, I suppose, that, but yeah, I don't know. I think I'm finding it very, very tricky to justify being a buyer in oil right now with this. I mean, you know, you could look at this little move here and say, yeah, oil's in an uptrend, we're going higher, whatever. But if you look at the grand scheme of oil and what it's been doing, actually, I think it's even further back. It's been trending down now. Yeah, it's been trending down for a long time. So, you know, being a short seller, to be honest, is ideal in my view. It's more just a case of waiting for that catalyst. Yes, Euro pound is negative swaps if you are a buyer. Aussie yen, okay. Hold on, I'm just looking. I might be looking to short the Dow in a couple of minutes. I might have to do that on stream. So what I'm looking at here is this is a scalping approach. So I've just taken the 15-minute candle, bracketed it from New York Open. I trade the breakout. So I'm just keeping that on a different screen so I can keep an eye. Anyway, not that anyone asked, but Euro yen. Okay, sorry, not Euro yen, Aussie yen. I'm not sure actually what the RBA's policy is right now. I don't know what their stance is. Let me just have a quick look. Like I said, I've been pretty inactive recently. So, the RBA cuts cash rates 25 basis points to 3.6, signals likely further easing of the net. Okay, I think there's the opportunity to maybe be a buyer here. So we've got... Oh, actually, no, hold on. No, I can't be a buyer. Sorry, I misspoke there. I don't think there's anything because we do have, yes, the Bank of Japan may be hiking, but it's more a case of when. So obviously October, yes, but I think the idea of the Bank of Japan hiking is kind of already expected. It's priced in. People have expected it all year. It's just a case of, you know, when is that going to happen? So let's just think. So the RBA sounds dovish at the moment. Bank of Japan's relatively hawkish. So we do have that divergence. However, again, I'm just not convinced that now is the time to be a seller. Okay, so just to give you what you asked for, I would like to sell, but I just don't think it's a wise idea to sell it just yet. If anything, I think maybe something like this, so you see a continued move of this downtrend would be okay. Look to be a seller here, and maybe take profits here or take partials, and then, you know, or hold it if you're into a more sort of position trade. All fundamental data on Edgefinder would already be priced in by the time the dollar, by the time the data shows on there. So why would it be bullish? What do you mean? Why would what be bullish? Also, fundamental data, yes, does get priced in quickly, but narratives change. So yes, although you could say, let me just pull an example. The markets already know that COT data exists. They already know that GDP is flat. Or hold on, PMI is here. The markets already know this. So yes, it's not a surprise, and no one is acting surprised, and no one's saying it is some secret holy grail. But it does give you that directional bias. So although it's already priced in, it doesn't mean the market stops moving in the direction that the fundamentals suggest. Does that make sense? I'm not sure if I worded that really badly, but hopefully you get the idea of what I'm trying to say. Edgefinder on oil. Let's see. Oil is slightly bearish actually here. I didn't even see this, so I'm glad you brought that up. So maybe actually we could look to be a seller of oil. Let's see, what could we possibly get here? Maybe a 50% retracement would be okay, something like this. Even so, I don't know. I don't like oil. It's not something that I enjoy trading. I can't tell you why. I really don't know why, but I just don't enjoy trading oil. Even from a technical aspect here, I don't really see anything here. Akko, hello, it's good to see you. If there are many bullish reports, is there... Hold on. If there are many bullish reports, there is more risk of disappointment. What do you mean disappointment? Do you mean from forward guidance or from data that gets released next? Because the Edgefinder is scored on surprise. So you've got the eco surprise meter here. So it's like, this isn't scored just off, CPI being X. It's based on CPI is X compared to its forecasted amount. So the surprises drive that. But, again, if you're looking to be a long-term player or a long-term trader, I would say that you need to do a little bit more research on the deeper levels of the economics. So what I mean by that is, although, let's say dollar Swiss is bearish here, I understand what your point is, and you are completely right that, yes, things are priced in. But then what you can do is go to, what am I looking for here? Things like this. So you can go to economic growth. You can go to labor market. You look for the trends in the economies. So you look for, okay, maybe this isn't enough for you. Maybe you think, okay, well, the next release, this could completely change, or it could go back to neutral, and that's not a trade I want to be in anymore. So I don't want to take that. But then you could look at, whatever your trade is based around, whether it be inflation or interest rates or whatever labor market. Then you can go look at the trends and say, okay, well, this economy isn't doing well. So even if they do have a one-off good report, it doesn't seem like they're going to be able to sustain that type of performance, if that makes sense. Anyway, I feel like I'm kind of yapping now. Seems like the questions are done, so I will leave you guys there, unless there is anything else you want to ask me before I head off. But it has been great to be back. I missed all of you, and I hope you're all having a great summer. Got to say, these summer markets have been horrible. Really not enjoyed trading the past month, although actually I haven't traded the full month. I took a break for a while. For me, the best way to use Edgefinder is go back 4 weeks and look at the score. That is also a great point. I didn't even think about that. Yeah, the history or historic score of every pair is there as well. So you can see sort of the trends, obviously not price action trends, the economic trends. Anyway, fellas, ladies, I'm going to head off. I hope you're all well. I hope you all have a great week. I will see you later. I'm back on twice this week, I think. So I'll see you soon. Have a good one. Stay safe.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.